The summer of 2025 marked a turning point in the long and complex history of U.S.-Japan trade relations. For decades, the two nations had enjoyed a mutually beneficial partnership, with Japanese cars becoming a familiar sight on American roads and U.S. consumers relying on the reliability and innovation of Japanese automakers. But this summer, everything changed. The Trump administration, citing concerns over trade imbalances and the need to protect American manufacturing jobs, proposed a sweeping and controversial tariff increase on Japanese automotive imports. The announcement sent shockwaves through both countries' economies and ignited fierce debate among policymakers, business leaders, and workers on both sides of the Pacific. The plan was to raise tariffs from a modest 2.5% to a staggering 27.5%. This dramatic escalation threatened to upend a trade relationship that had been carefully nurtured over generations, putting billions of dollars and countless jobs at risk. This move was not an isolated event. It followed earlier tariff hikes on Japanese steel and aluminum, signaling a broader protectionist strategy by the U.S. government. The message was clear. America was willing to take bold steps to reshape its trade landscape, even if it meant straining ties with key allies. For Japanese automakers, the implications were immediate and severe. Higher tariffs meant increased production costs, uncertainty in supply chains, and the looming threat of a sales crisis in one of their most important markets. Dealerships across the U.S. braced for price hikes, reduced inventory, and anxious customers. The automotive sector, a cornerstone of Japan's export-driven economy, now faced unprecedented disruption. Executives scrambled to assess the impact, holding emergency meetings and exploring contingency plans. The ripple effects extended beyond the car industry, threatening suppliers, logistics companies, and even local communities dependent on auto manufacturing. As the deadline for the new tariffs approached, a sense of uncertainty and anxiety gripped manufacturers, dealerships, and workers alike. Many wondered if decades of cooperation and trust could withstand this new era of economic nationalism. Japanese officials, determined to protect their nation's economic interests, called for urgent negotiations and sought support from international partners. Meanwhile, U.S. leaders stood firm, insisting that tough measures were necessary to level the playing field and revive American industry. Behind closed doors, tense negotiations unfolded between Japanese and American business leaders. Each side weighed the risks and potential fallout, knowing that the outcome would shape the future of the global auto industry. The stakes had never been higher. Industry analysts watched nervously as stock prices fluctuated and forecasts grew increasingly grim. The question was no longer if the tariffs would have an impact, but how deeply they would cut into profits, jobs, and consumer confidence. As the world watched, the future of U.S.-Japan automotive commerce hung in the balance, with the outcome poised to redefine not just trade between two nations, but the very nature of global economic cooperation. President Trump's tariffs aim to address the U.S. trade deficit with Japan, particularly in the automotive sector. The administration argued that Japanese brands thrived in the U.S., while American automakers struggled in Japan. The tariffs were framed as a way to protect American jobs and manufacturing. By making Japanese cars more expensive, the goal was to boost U.S.-made vehicle sales. This protectionist stance resonated with those feeling left behind by globalization. The tariffs were seen as a corrective measure to rebalance trade dynamics. The high tariff was a negotiating tool, pressuring Japan to engage in trade talks. Tokyo reacted with alarm to the tariff threat, as the automotive industry is vital to Japan's economy. The proposed tariffs could trigger a recession and destabilize major corporations. Japan launched a diplomatic offensive, sending envoys to Washington to negotiate. Despite efforts, talks failed to produce a breakthrough. Japanese officials highlighted their significant investments in U.S. manufacturing. The mood in Tokyo was one of frustration, fearing a damaging trade war. Analysts warned that tariffs above 10% would have drastic consequences. Rumors circulated that Japanese automakers might exit the U.S. market due to tariffs. However, industry experts dismissed this as a myth. The U.S. is a crucial market for Japanese brands with millions of vehicles sold annually. A withdrawal would be corporate self-destruction, not a viable strategy. Instead, Japanese car makers focused on adaptation and cost reduction. Their deep-rooted presence in the U.S. made a full-scale departure unthinkable. The real strategy was resilience and leveraging American operations. The narrative of a Japanese retreat failed to grasp economic realities. Japanese automakers were committed to overcoming the tariff challenge. Amidst swirling rumors of a Japanese retreat from the American market, uncertainty loomed over the future of Japan's industrial presence in the United States. Many speculated that Japanese companies were pulling back, rethinking their investments, and shifting their focus elsewhere. Headlines buzzed with speculation, and business leaders on both sides of the Pacific watched closely, wondering what the next move would be. But then, Nippon Steel's bold acquisition of U.S. Steel sent shockwaves through the industry, directly countering the narrative of withdrawal. This was not a quiet exit, but a decisive entrance onto the American stage, signaling renewed ambition and confidence. The $14.1 billion deal was more than just a business transaction. It was a clear demonstration of Japan's enduring commitment to the U.S. industrial landscape. By investing such a significant sum, Nippon Steel showed it was ready to play a major role in shaping the future of American manufacturing. Initially, the deal faced skepticism and even opposition, including from President Trump, who voiced concerns about foreign ownership and American jobs. However, as details emerged, the promise of job creation and economic growth began to win over critics, and support for the merger grew. The merger challenged the widespread belief that Japan was stepping back from the U.S. instead. It became clear that Japanese companies were doubling down, determined to remain key players in America's vital industries. This strategic move was about more than steel. It was about integrating deeply into the American supply chain, ensuring that Japanese expertise and innovation would continue to drive progress in U.S. factories and infrastructure. The acquisition highlighted the enduring economic ties between Japan and the United States, built over decades of collaboration, trust, and mutual benefit. For Japanese companies, the American market wasn't just another opportunity, it was a crucial part of their future growth and global strategy. They saw their fortunes as closely linked to America's success. Rather than retreating, Japanese firms were investing more deeply, determined to secure their place in the evolving landscape of American industry and to build lasting partnerships. The deal underscored Japan's focus on long-term partnership with the U.S., emphasizing collaboration, shared prosperity, and a vision for the future that benefits both nations. In the end, Nippon Steel's investment stood as a powerful symbol of commitment, resilience, and the enduring bond between Japan and the United States, a partnership built to last. Japanese automakers responded to tariff threats with a strategy of adaptation. They focused on reducing operational costs to offset potential tariff impacts. This involved reviewing vehicle design, supply chains, and marketing. Automakers pressured suppliers to lower prices, creating industry-wide innovation. They reevaluated vehicle features to keep prices competitive. Strengthening partnerships within the U.S. was key to their strategy. Localizing supply chains reduced reliance on imported components. The strategy was about resilience and maintaining a strong U.S. presence. Japanese automakers aimed to thrive despite trade challenges. Japanese automakers' U.S. manufacturing presence is a powerful shield against tariffs. Companies like Toyota and Honda have invested billions in American plants. Vehicles built in the U.S. are exempt from import tariffs, providing flexibility. This allows strategic production shifts to avoid import taxes. American factories are also a political tool, complicating the tariff narrative. Japanese automakers are major employers in several states. Doubling down on U.S. manufacturing mitigates tariff risks. The strategy strengthens their identity as American manufacturers. Their U.S. operations are a vital defense in global trade. The trade dispute impacts American consumers and workers significantly. Tariffs lead to higher vehicle prices, affecting affordability. Reduced choice may result as some models become too costly to import. The vibrant U.S. auto market could become more limited. For workers, tariffs aim to protect U.S. manufacturing jobs. However, global supply chain reliance complicates the picture. Tariffs on parts increase production costs for all automakers. Jobs in sectors relying on imports face uncertainty. The ripple effect creates both opportunities and risks for the workforce. By July 2025, the U.S. automotive landscape is reshaped by protectionist policies. These policies, aimed at bolstering domestic manufacturing, have led to significant changes in the industry. American car manufacturers are seeing a resurgence, while foreign automakers are forced to rethink their strategies. The threat of tariffs forces strategic re-evaluation by Japanese automakers. Companies like Toyota and Honda are now investing heavily in local production facilities to avoid the hefty tariffs. This shift is not just about avoiding costs, but also about staying competitive in a market that is becoming increasingly protectionist. The narrative of a Japanese retreat is a myth. Economic ties are too deep. Instead of pulling out, Japanese companies are forming new alliances and partnerships with American firms. These collaborations are aimed at sharing technology, reducing costs, and maintaining a strong market presence. Japan adapts to survive and compete in a challenging market. Engineers and researchers are working tirelessly to innovate and improve their products. The focus is on creating vehicles that meet the specific needs and preferences of American consumers, while also adhering to new regulatory standards. Nippon Steel's acquisition of U.S. Steel is a testament to long-term investment. This move not only secures a steady supply of raw materials, but also strengthens the economic ties between the two nations. It's a strategic decision that benefits both parties in the long run. Japanese automakers accelerate localization to shield sales from tariffs. New factories are being built and existing ones are being expanded. This not only helps in avoiding tariffs, but also creates jobs and boosts the local economy. For consumers, tariffs mean higher prices and fewer choices. The cost of importing cars has gone up, and this increase is being passed on to the buyers. Dealerships are struggling to keep up with the changing landscape, and consumers are feeling the pinch. Workers face a duality of risk and reward in the evolving market. On one hand, there are more job opportunities as new factories open. On the other hand, there is uncertainty about job security and the future of the industry. The workforce is in a state of flux, adapting to new roles and responsibilities. The U.S.-Japan auto trade relationship undergoes a fundamental transformation. Trade policies are being renegotiated, and both countries are working towards a more balanced and mutually beneficial relationship. This transformation is not just about cars, it's about the broader economic ties between two of the world's largest economies. The focus shifts to onshore manufacturing and strategic adaptation. Companies are investing in advanced technologies like robotics and AI to improve efficiency and reduce costs. The goal is to create a sustainable and competitive automotive industry that can thrive in a protectionist environment.